If you have the ability to raise cash, go raise cash. Go allow yourself to sleep at night. Well, I'll quote a stat. When we turned bullish in the fall of 2020, bombastically bullish at that point. I don't think I've ever been as bullish prior to 20. I think 2017 was like the only time I'd been more bullish in my career personally, which was we're saying, hey, look, there are 5 things that are about to happen, at least according to our models at the time. This is October 2020, that are about to happen that almost never happen at the same time. Growth's going to be accelerating. Inflation is going to be accelerating. Corporate profit growth is going to be accelerating. Margins will be expansion, all that good stuff in that bucket. But then you also going to have aggressive monetary easing and aggressive fiscal easing. There have been 10 quarters prior to that moment since 1960 that where all those things have happened at the same time. And obviously, you imagine, the annualized returns on things like the S&P are extremely high. And I'm like, hey, we're about to get like 3 of these quarters back to back to back to back. Fast forward to today, we're effectively on the precipice of seeing the exact same dynamic, but in reverse. Growth will be accelerating. Inflation's likely peaking. So by the time we get in the third quarter this year, we'll have inflation decelerating. We'll have corporate profit growth and margins compressing. We'll have aggressive monetary tightening, aggressive fiscal tightening. It's literally the exact opposite scenario that created bubble price charts for every risk asset, known to man. And so the expectation that we're going to somehow survive the opposite of creating bubble price charts for every risk asset known to man is one that's it's a fallacy, in my opinion. And that most natural conclusion would be to say, hey, look, if you don't want to lose your stress over trying to sort of trade every single wiggle in the market, because most wiggles are going to be angled down unless you have the ability to generate returns consistently on the short side, you probably do well just to book your gains and give yourself some time and breathing room, opportunity to wait and go buy assets that you like back at a lower price.
From the bottom, ain't no half stepping. I'm the dog, I made it through so they don't ask questions. Long Beach, and it ain't no half repping. Once a dog, always a dog, so they don't ask questions.